Thanks again for joining our weekly Bitcoin review. My name is Jason Zins, partner with Skybridge Capital. With us today, Brett Messing, president and co-CIO of Skybridge. As always, we will run through some of the relevant topics in the Bitcoin world of the last week. Certainly some eventful news today and in the last couple of days. So with that, we'll go ahead and kick it off. As always, if you'd like to ask questions, you can do so with the Q&A button at the bottom of your screen. So, Brett, we'll start with the most recent news, which was
let me go first. I'm going to start.
Go ahead.
All right. You had an assignment, which was to watch television this afternoon because there was a conference where Cathie Wood, Elon Musk, and Jack Dorsey spoke. So why don't you give us all a book report? What did you learn? What should we know?
Absolutely. It was a much anticipated appearance by Elon Musk alongside Jack Dorsey and Cathie Wood. And my biggest takeaways really center around Elon Musk for, probably obvious to most. He made clear repeatedly, and the first time this is confirmed publicly, that not only does Tesla own Bitcoin, of course, which has been disclosed, SpaceX, a private company, owns Bitcoin on its balance sheet, as does Elon Musk personally. He reiterated that he also owns Dogecoin as well as some Ethereum, but at multiple times made very clear that he owns a lot more Bitcoin than anything else. First time that has been confirmed publicly, although I will say Anthony broke that news on Twitter a couple of months ago. High level, I think he clearly supports the mission of Bitcoin. His views have evolved. We'll get to the energy side in a moment. But he's made clear that he has large financial incentives across the board directly related to the price of Bitcoin. On the energy side, obviously, we spent a lot of time on this webinar discussing Tesla no longer accepting Bitcoin for transactions, and Elon Musk's focus has been on the energy side and the fact that a lot of Bitcoin mining was done with dirty coal and other energy, and there's been reports in recent weeks that with the decline or the banning of mining in China, that overall about 50% or more of the hash rate in Bitcoin mining is now done with renewables. And so the question was posed very directly to Elon. What do you think? Do you agree? Is Tesla going to go back to accepting Bitcoin? He didn't go as far as making the announcement on air that they were changing their policy, but he did acknowledge that there have been big improvements, obviously with the reduction of mining in China, and essentially left it as, he was going to do, along with Tesla, a little more due diligence. And if, in fact, they do confirm what is becoming the consensus, that roughly 50% is now done through renewable, it does sound like Tesla is going to re-implement their policy of accepting Bitcoin. So, Brett, I know you've spoken a lot, probably ad nauseum, about Tesla and Elon Musk and energy. What are your feedback on that?
Well, I guess my first thought is no one is buying a Tesla with Bitcoin, or virtually no one. So we've turned Elon Musk into the good housekeeping seal of approval on the E and ESG. I mean, there's no real world significance to Tesla taking, Bitcoin. So I find that sort of amusing. Look, again, we are in the early stages of Bitcoin where, for better or worse, individual actors matter. I view that as a positive because it just speaks to how early it is. And, if we're right and it's early, right, we're going to make a lot more money than if we're mid-cycle and, in Bitcoin. So we're just so super early. And, I think it's, this is sort of how bear markets start to end is, you get, a cessation of bad news and, you get sort of price creep. And so, I guess my general reaction is, it's good. Again, I don't think it's cartwheel worthy, but it's certainly a step in the right direction. You had mentioned that there was some discussion of the S in ESG from Cathie Wood. Why don't you share that with the audience?
Yeah, I found this to be some interesting talking points from Cathie Wood. Obviously, ESG is becoming more and more mainstream, especially in institutional investment circles, increasingly important in asset allocation. But as you and I discussed before, a lot of it is focused on E, right, on the environmental side. Cathie wanted to make the point that there's a big social component to Bitcoin. And I thought she put out some very interesting statistics in that, based on ARC's analysis and research, there are at least 4 billion people in the world that currently live under dictatorships. There are 1 billion people, at least 1 billion people that live in jurisdictions of at least double-digit inflation. And this is where certainly she and Jack Dorsey and I think even Elon agree that Bitcoin represents some of the best hope for those sorts of people, right? In the developing world broadly, as far as economic empowerment. And so that's, I think, an area that is less focused on. The most practical application here is really in the global remittance market, which is reported to be $700 billion plus in annually. Jack Dorsey mentioned that fees on remittance can be anywhere from 8% to 30%. And Bitcoin, the Lightning Network, Jack Mallers' Strike, other applications essentially drive those fees to zero. And for countries like El Salvador, which we've discussed, that have 25% of their GDP in remittance, that is a major, major deal. And so this S component, I think, doesn't get as much coverage, but arguably has the most impact on the everyday lives of a big part of the global population.
No, look, I think it's interesting that she raised it, and I think there's a nexus here with some concerns around regulation. And so I'll break some messing family news. So my middle daughter, Sam, graduated from Brown, honors, I might say, and she's a very good writer, and she wants to work in Bitcoin. And she, just for fun, is writing a sort of a piece entitled "Open Letter to Elizabeth Warren: Why Progressives Should Love Bitcoin." And it's for many of the reasons that you sort of are outlining there. And I think that the community needs to make the case better, because Bitcoin does represent sort of a hope and a path to sort of financial empowerment for billions of people in the world, and it should be something that the progressive community embraces. So we'll get Anthony to tweet her maybe we can get it to go viral, and maybe Elizabeth Warren will even read it. But I think the more educated the liberal community gets around the S, I think it'll help on the regulatory front, not to be totally pragmatic about it. But anyway, well, thanks for sharing that. I think, it's a good day for Bitcoin. We're up. I do also want to point out that you and I did this together about a month ago, and we called for the Jason Zinn's bottom, and that proved to not be the case. But
False bottom, yeah.
False bottom, it's fine. I should guess, we are in a bear market right now, and everyone's okay. Right. And so we just need to be hodlers, which is what we have, been advising. And the most interesting data I've seen relates to sort of new user growth on chain, where you can look and see basically the number of new people that are coming into Bitcoin. And, notwithstanding the price being sort of crappy and, trading here around the, low 30s, the chart just shows people are continuing to buy their first Bitcoin. The adoption is continuing, and that's ultimately that's a story that why we own Bitcoin is we view it as an adoption story, and the evidence, not anecdotal, the hard evidence suggests user growth is going up. So anyway, so let's get on to the week's news.
Terrific. So Very active week in capital markets as it relates to crypto companies. So we'll start with perhaps the biggest, FTX, the exchange announcing a new funding round. They have raised $900 million at an $18 billion valuation. The company is only 2 years old. It was founded in May 2019, and its valuation at 18 billion is up starkly from the $1.2 billion valuation from a year ago. Its eccentric and now very wealthy founder, Sam Bankman-Fried, is reported, I just read in Forbes, I think, to now have a net worth of roughly $18 billion. So the largest private funding round for a crypto company. Very big news. Perhaps most interesting is the lineup of investors, right? And I'll name off a few, and hopefully we can get your reaction on them, Brett. Big names like Paul Tudor Jones, Alan Howard, Izzy Englander of Millennium, Dan Loeb's Third Point Participating, SoftBank, some of the venture investors like Sequoia, Paradigm, Ribbit, you name it, an all-star blue chip lineup, all backing FTX. Your reaction?
First of all, 2 years, right? To create a company and 2 years later have it be worth 18 billion is absolutely incredible. It should be inspiring to everyone, young and old, right? Wherever you are in your career, about like what's possible in the world. So I think that's just sort of super cool. Look, the investor base, let's focus on sort of the Wall Street crowd that's in this. You have the smartest, most successful people, right, wanting to invest, right, in sort of crypto, the Bitcoin ecosystem, right? Steve Cohen 2 weeks ago, this is too big, we're not going to miss it. We just got to figure out sort of how to play it. So I think we've become dulled to that because there have been so many of them. But I think it is just a good reminder, right? Particularly, when we're in a bear market, of that the greatest investing minds, guys who are my age, not your age, are putting real capital into the space. But I think the other thing that is interesting, and let's focus on Paul Tudor Jones. So, Paul Tudor Jones has played a critical role, I think, in our Bitcoin adoption. When in May of last year, he went on CNBC and sort of outed himself as a Bitcoiner, and that really provided air cover for other people who manage money to buy Bitcoin. That said, we're aware that in Tudor's hedge fund, his Bitcoin holdings are quite small. And that really stands in sharp contrast to, how vocal he's been. And, I have assumed that he has a very large personal position in Bitcoin, and the fund, right, much smaller. And this just sort of validates that, right? So the investment was made by the Paul Tudor Jones family, not Tudor Investments. And I think what that reflects is that, the investor base, and I think, look, we've found this, it isn't there yet. And I'm sure he has large chunks of capital from people who are like, I don't want to do crypto. If you buy Bitcoin, you're going to get a redemption notice from us. And so, he's a great money manager, but he's also a businessman. And he made the judgment, right, that his investor base will only tolerate, I guess, a relatively nominal amount of Bitcoin. But, he clearly wants, much more exposure to that, both in Bitcoin and through, I imagine he's made other, private investments in companies. And again, it's further evidence of how early we are. I had this sort of epiphany about what I think the path forward is going to be. I actually shared it with someone at a senior person at NYDIG last night, who actually said, they're really smart. He had it 2 weeks ago, so that doesn't surprise me. If we remain 2 weeks behind NYDIG, we'll be doing great. But which is, I think most of the institutions are going to miss it. Tesla stock was underowned, has always been underowned by institutions. In fact, there are avenues of tiers of hedge fund managers, that have lost not just, tens or hundreds, but in the aggregate, billions of dollars shorting Tesla. So not only did they not own it, they were short it. Amazon was incredibly underowned, particularly for its first 15 plus years. Look, we're going to continue to see institutional adoption, but I think it's going to be slow. And I think this is going to be, I don't want to say retail phenomena, but I think it's going to be individual investors globally, right, that are going to continue to accumulate Bitcoin and drive it higher. And institutions will eventually come into it. But again, they come into Amazon. Amazon's now much more institutionally owned. But, the real money, right, was made when it was, underowned, to a great degree. And so I just find, again, that the fact that you have these hedge fund managers like Izzy Englander, right, who runs Millennium, one of the most successful hedge funds on the planet. These guys are as close to being bulletproof in terms of, there's so much equity with their investors. They could do virtually anything that they want. And they're choosing to do this personally, but not in their funds. And that's clearly a business decision. It's an interesting one. I mean, do you have a reaction to either the FTX news or my take?
Yeah, no, I think you made an interesting point that sort of ties into a much higher level point, the democratization of investing with the likes of Robinhood and the Reddit army, if you will. I think your comments on Bitcoin and institutions potentially missing it is all part of this larger theme of the democratization of finance, which ultimately should be good for consumers and for the average investor. And so as long as the regulators will cooperate or at least stay out of the way of retail investors, hopefully they'll participate, they'll get the big gains, and some of the institutions, to your point, may miss out. Do you see that changing anytime soon? And how much of this is tied to price and volatility?
I think it's incredibly tied to volatility. It's just, you have an asset where, again, you can be down almost 40% in a month. Even a small position size, right, can have a big impact on your return stream. So I think some of these managers are saying, look, even if we make money in Bitcoin, it might be bad for business. Because if it increases our volatility, people will judge us differently. Maybe we're slotted in for a certain slot in their portfolio, and now our fund will be acting differently. So I think it's the volatility. I also think it has a lot to do with the access. While there are these institutional custodians, we don't yet have, the first ones will be State Street and BNY, where they will actually act as a custodian and hold your Bitcoin. Right now, it's Fidelity Digital, it's NYDIG, it's Coinbase. We're obviously comfortable. We have funds that are registered investment companies. That's where they own their Bitcoin. You have a lot, Tesla and MicroStrategy, Square, public companies holding Bitcoin by these sort of non-bank institutions. But I spoke to a hedge fund manager, a very large fund, who's very, bullish on Bitcoin, owns a lot personally. And his take was, I need a commercial bank. Okay. NYDIG, Coinbase doesn't work for my investor base. And so it'll be interesting to see once, again, we have large US banks providing custody, how much that changes and what that means. And then again, I think the ETF will actually matter because it will be just an easy trading vehicle. I mean, right now, if you're a hedge fund and you decide you want to trade Bitcoin, there's a fair amount of logistical stuff you have to go through, right? Where are you going to custody it? How do you move the money around? How does it roll up to your administrator, right? Whereas once there's an ETF, right, it's just a stock, right? It's really, it's no different than trading Disney stock in terms of, how you engage with it. So I think the ETF will facilitate adoption just because it operates in the existing ecosystem.
So a lot of this then, is a regulatory matter in various different forms. You've got the ETF, you've got what the banks and the custodians can do. So certainly seems to be some noise heating up out of Washington on the regulatory side with Elizabeth Warren and the SEC and the Fed. And so we'll see where all of that dialogue goes. Relatedly, and I think, when you look at the FTX round, there were a few others. I think we spoke about them last week. Two big SPAC deals with Circle and with Bullish, a crypto exchange. Looks like we have a special guest.
This is how you dress for the Bitcoin review?
You're wearing short sleeves.
Look at this, though. I mean, what's going on here? This is how you dress?
The summer beard.
For the Bitcoin review? All right.
We're
just checking.
I've hijacked Anthony's office.
How do you like the office, Jace? Okay, I know you want my W-2 on top of everything else. How do you like the office?
I could get used to this. We'll talk. Thank you, Anthony. So the FTX round, some of the SPAC deals last week, you have in our newsletter, SoftBank participating in the Bullish deal with a $75 million investment. You had just today another SPAC bringing a Bitcoin miner public. This is all, as we discussed, sort of the picks and shovels approach, right? You're seeing this big pickup in venture and private equity investment in the ecosystem, which I think plays to your point on, there's still a lot of challenges and a lot of aversion to owning Bitcoin outright. So speak to this sort of picks and shovels approach, if you will, Brett.
Yeah, again, I think that there's a couple aspects to it. There's the easy to buy a stock versus to buy spot Bitcoin presently. There's the volatility. I think these businesses stocks will just be less volatile than spot Bitcoin is. The longer term, though, why I think it's so good for Bitcoin for a lot of reasons, but the more people study Bitcoin, the more they learn it and understand it, the more likely they are to want to buy it and own it. And so, I think it's great that there's this proliferation of public companies, because I do think you're going to have some number of smart managers get involved, and they'll be looking at a miner or a custodial business, and they'll be like, why don't we just buy Bitcoin? Like, why are we, in every business, right? You have a level of operational risk, right? Bitcoin mining, where is it? What's the regulatory outlook, right? We'll think about Chinese miners. What's your energy source? Look at Texas, right, where the energy, got shut down. Just human error, which, that all goes away when you just buy spot Bitcoin. So again, it's an adoption story. I view investing in those as like a gateway drug. And some amount of those people will, end up buying Bitcoin. It's all very, very good for the sector.
Certainly would agree. I think it also just speaks to the belief in the long term of the ecosystem, right? You have billions of dollars flooding into the ecosystem, the private companies, the miners, the exchanges, the bank entities, right? These second layer solutions. Billions and billions of dollars are flooding into this space from very, very smart institutional investors. And so for the time being, while they might not be buying Bitcoin outright, and while the price of Bitcoin might be, lower than we'd all like for July 21st, I think it does, combine with this adoption story that you've touched on, bode well, hopefully, for the future, the long term of Bitcoin and the ecosystem.
Well, and to tie that together with the regulatory issue, so all this money means jobs, right? Those jobs are people. Those people have friends. Now we have more people buying Bitcoin. Those are voters, right? And so, as it becomes a bigger and bigger business, regulators will embrace it, and I think you're going to see, Texas benefit from embracing mining. Tennessee is embracing mining. Miami is trying to become, the Silicon Valley of Bitcoin, and I think they're gonna be successful in that regard.
Eric Adams, the presumptive mayor of New York, has said he wants to bring.
No, exactly. I think it's all good for Bitcoin.
And to tie it back to the beginning, I think all of this speaks to the social component of ESG, which Cathie Wood has tried to highlight. Bitcoin and crypto is much more than just a speculation and an investment vehicle, and you're starting to see that with a lot of these private funding rounds and ecosystem plays.
There's one thing which I know wasn't on our agenda, but I did want to touch on it, which, the adoption rate has been driven a lot this year by virtue of, the pandemic and, all the money printing. If you remember, Stan Druckenmiller said that when he first encountered Bitcoin, he saw it as a solution in search of a problem, which, with respect to Druckenmiller, is a very U.S.-centric view. But after COVID, he now sees, right, Bitcoin as a monetary life raft, right? I think the 10-year is telling us something that's very interesting. I didn't see where we closed. We got as low as 115 2 days ago, but we had that super hot inflation number, right? The 10-year went to 140, and again, it got down as low as 115 on Monday. So what is the 10-year telling us, and why are we discussing it on the Bitcoin show? I think it's saying two things. One is it's saying Jerome Powell is right. Inflation is transitory, right? Inflation number of 5 point something, right? And the 10-year rallies the yield down to 115. The second thing it's saying, right, is the Delta variant is going to slow global growth, right? Not recession, but I think we were looking for something like 6.5% in GDP. Maybe we end up at 5.5% or 5%. There's talk that the Olympics might get canceled. My dad canceled a trip. I mean? I was supposed to see Springsteen Saturday night and decided not to go. Those decisions on the margin, like, I'm not saying we're going to go back to lockdown, but I do think you're going to see a slowing growth. And what that means is that slowing of the tapering gets pushed out further, right? So more that money printing machine just keeps on rolling. And I think the odds of Biden pushing through a large infrastructure program, government spending, stimulus, whatever you want to call it, are going to keep going up, as the Delta variant, becomes a real thing. And, this isn't science, but, I have a number of friends who are double vaccinated and they got COVID. Now, the cases were mild, but I think it sets up a very good macro landscape for Bitcoin. I talked to Mike Novogratz in the last several months, and his biggest concern was high rates. In fact, he was short the 10-year as a hedge. And this is the problem with being long and short, right? Which is, in the short term, he's lost on both, right? His crypto assets declined in price, and he's lost money on the 10-year short. But I completely agree with him. Is that I have been concerned that if we saw yields really back up, the 10-year, if you remember, went from 90 basis points to 180 in the first quarter. That had continued to go to 2.5 and 3, and when yields get rolling against you, it's not quite Bitcoin, but they can move really fast. And so again, I think that the backdrop for Bitcoin is really, really good. So I just wanted to throw that into the adoption discussion.
Weaving in some macro, and we don't talk about it as much, but you think back to Stan Druckenmiller's comments and last March being a catalyst. A lot of that was the money printing and the stimulus. And to your point, there had been some concerns or discussions that was maybe going to fade and taper was going to come into play. But with the pickup in the Delta variant and the potential slowdown in the economy, it looks like pumping and stimulus is very, very, very much back into the mainstream. So we'll see how that if that filters into the price of Bitcoin in the near term. We'll move now into our last topic, and then we'll take some questions, which is the difficulty adjustment. You've got the app on your phone now that you look at. why don't you speak quickly at a high level to explain what the difficulty adjustment is, and then why it's relevant of late?
No, so, Bitcoin was everything that makes up Bitcoin was sort of existing ideas that Satoshi, sort of assembled in this sort of unique and novel way. But there was one part where he made a substantial contribution, which is the difficulty adjustment. And, some have suggested it's worthy of, a Nobel Economics Prize. But essentially, as we all know, the Bitcoin network consists of, a collection of Bitcoin miners around the world and nodes. We operate a node here at Skybridge, and coins are mined, right, every 10 minutes, and they're mined through the process, right, of solving these complex math problems. So, when the computing power in the network increases, the problems get solved more quickly, and it can take us off of this issuance schedule. So what happens is every 2 weeks, the Bitcoin network will adjust to make sure that the level of difficulty of the math problem results, right, it matches the amount of computing power with the math problem difficulty level, right, to give us a Bitcoin every 10 minutes, right? And so what we had in the beginning of July, following the Chinese miners getting completely unplugged, was the largest difficulty adjustment downward in the history of Bitcoin, right? So it was a 28% adjustment down, okay? The largest ever. So we had a difficulty adjustment on Saturday night, and it was about 7% or so, 7 or 8, I can't remember exactly. It was the fourth one in a row that was down. And it's the first time in the history of Bitcoin that there were 4 difficulty adjustments downward in a row. In fact, there was only one time where we had 3 in a row. And I'm fascinated by this for a couple reasons. One is, again, it's just the brilliance of the design, this concept of difficulty adjustment. But it really shows the resiliency, of the network. Again, we had half the network unplugged, right? And Bitcoin just keeps chugging away, right? It's as a user, as an investor, and other than the price changing, nothing really happens. So I now have an app on my phone, as you rightly point out, where I can see what the projection is for the difficulty adjustment. So the next one will come at the end of the month, and it looks like it will be an upward adjustment. So what that will indicate to us is more computing power coming back onto the network. Now, historically, there's been a correlation between difficulty adjustments and price. So again, I think that there are a number of variables why Bitcoin's price will, I think, resume climbing. And, I would put sort of the difficulty adjustment turning upward, which is really just reflecting, more computing power coming on, a more secure network. And again, I think it will just underscore for people, again, how resilient it is. Like the state attack was launched on Bitcoin. It was successful in that it drove all of the miners out. It was unsuccessful if its goal was to in any way hamper Bitcoin and the Bitcoin network. And so, again, I think it's the thing that made this difficulty adjustment noteworthy is the projections that it will be the last downward, because we're starting to see those Chinese miners get plugged in elsewhere, whether they be in Kazakhstan or in Maryland or in Canada. Now it's going to take time. The projections are it'll take 6 to 12 months before all that capacity, comes back on. But it'll be very interesting to see, because that's how we'll be able to track it is we'll be able to track it through these difficulty adjustments. So, it's something that I think we should, keep an eye on. But again, I think it's just, the part of Bitcoin that's really, really interesting.
Well, and I think more broadly, the last 3+ months, you've had massive shocks to Bitcoin and to crypto. I mean, you had in the month of May the second largest drawdown in the price of Bitcoin, and you have just in this last month or two a seismic shift in the network as far as mining and hashing power leaving China, going elsewhere, a lot of it coming to the US. And so you talk about stress tests to the system, to the price, to the asset, and it's certainly been a wild couple of months. So with that, we've got a number of questions here that we'll run through quickly and we'll close it out. The first one, wasn't Anthony just flying over Fenway Park today? I believe that's right. You may be able to make out behind me the Superman poster. Maybe Anthony fashions himself a Superman, and yeah, he was in Boston today. He's now here in New York. Not sure how he did it, but good question. A few here about price, short term, long term. With Bitcoin hitting below 30K this past week, how does this impact previous price predictions? 100K and higher at the end of this year. Is that still a number we should be looking at? And I guess more broadly, what's your view on price targets at all, Brett?
Well, first of all, I think about Bitcoin through a time prism, not a price prism. So I can just say, I've outed myself as being irresponsibly long. And, people ask me, well, when would you sell some to go buy a toy or, do something with? And what I always say is not till 2025. And that's because of the halving cycles, right? So, we had a halving event in 2020, May 2020, when the number of Bitcoin issued in a day was cut in half. And that usually starts a bull market cycle, The next halving will occur in March of 2024. So, again, we think we're going to go from 100 million users today to over 1 billion by 2025. If you couple that with the halving that, we know is coming, that's where the prices can get sort of stupid. With respect to the price this year, we've now deviated from there's a model we've discussed called the stock to flow model, which was Plan B, who created it. He goes by the name Plan B. We did a Salt Talk, which I think it was one of our most viewed Salt Talks, would find interesting. I'm actually not a big fan of the stock to flow model, which maybe we'll save for a different show, because I think we're sort of running along here. But I guess just the direct answer to the question, I do not think we have seen the high price for Bitcoin this year. So we've already hit, I think, 64,500. I think we will hit a price that is higher than that in the fourth quarter. My personal view is we probably have lost 100,000. I don't think I anticipated us, being in a bear market, which we are. I think we probably start emerging, in the fall. It's the summertime. It has a feel of a bear market. The level of interest is lower. I mean, we have our lowest number of participants on this call. Thank you, everyone, for coming who did. But this is what a bear market sort of feels like. So I think when we get to the fall, price will start doing better. I think we'll get above where we were with the Coinbase IPO. But if you had asked me over under on 100,000, I'd say under. But again, if we get back to the Coinbase IPO price, it's 100% return from here. So I can tell you, I bought. I took advantage of being below 30 yesterday and bought 6 figures more of Bitcoin. So irresponsibly longer.
Well, maybe it's the Brett Messing bottom. Then it's had a nice jump in the last 24 hours. One other question related to our conversation on the institutional investor side. The question is, should Bitcoin owners feel less satisfied or secure with the asset now that it has become so mainstream and adopted by the world's billionaires?
More secure. I assume they're not talking about custody. No, look, I think Bitcoin's no different than, if I buy a sweater and then, one of my daughters is reading People magazine and I see George Clooney's wearing the same sweater. I think, I did a pretty good job of picking out a cool sweater. So I think we all appreciate validation. And so I think ultimately, it's good for Bitcoin. But what we have to be prepared for also is, Paul Tudor Jones going on TV and talking about why he sold all his Bitcoin. They just may not, they're not going to all be Warren Buffett in their orientation towards Bitcoin. But I think that'll just be part of the healthy maturation of Bitcoin.
Well, I think that's probably a first, Fashion and George Clooney on these Bitcoin
There
reviews.
we go.
So we'll leave it there. Just very quickly, Brett, one participant would like to know the app that you use to monitor the future or the estimate of the difficulty adjustment.
That's a good question. It's called, hold on one second. bitawr.com. It's a website, actually not an app. So I just have the website, as a home screen button.
Terrific. That does it for us this week. We look forward to seeing you all next week on the Bitcoin review. With that, thanks very much, Brett.
All right, thank you. Thanks, everybody.